Hey, welcome back to the series of Accountancy Chapter 3 Admission of a Partner. In this video, we are learning about treatment of goodwill. First of all, why we need to treat a goodwill. In order to know that, we need to learn the basic concept, that is, when we admitting a new partner, there'll be some sacrifice ratio from the old partners. So in order to compensate for that, new partner will bring compensation to satisfy, or for the compensation for the sacrifice ratio, he need to bring some amount with his capital as a goodwill. So that is what we need to treat a goodwill in a specified manner. We'll be learning other methods, other techniques, and other situations. But for now, we have two methods to calculate the goodwill. The first method is premium method, and the second method is revaluation method. So the first one is premium method. So premium method work like this: when a partner is bringing capital plus goodwill when he is admitting, that is known as premium, because he is bringing in the form of cash as a compensation for the old partners. But vice versa in revaluation method, when partner is not bringing goodwill when he is admitting, so that is known as revaluation. We need to treat a goodwill in this two methods. So that's what we need to learn in this chapter. When we are talking about the goodwill or treatment of goodwill, we need to know about the accounting standards 26. Everybody are talking about accounting standard 26. So first of all, we'll start from the basic, that is, there is an institution. This institution will give a norms and give criteria, or that will give a format to accountant in order to follow what kind of method you have to learn or what kind of method you have to adopt. So that institution is ICAI. It's an institution of Chartered Accountant India. That's an institution. That institution will give norms for accountant to follow the rules. So as per this chapter, we need to follow intangible assets, that will be goodwill. In order to talk about that, we need to talk about ICAI, Institution of Chartered Accountant India, will give adjustments, norms for the accounting. Basically, accountant has to follow it. That is called as accounting standard. It's compulsory. You can't choose, or you don't have choice choosing accounting standards, whether we need to follow accounting standard 26 or the respected accounting standards. You don't have choice. Every accountant should follow the accounting standard, and that is a norm which is given by ICAI. In this chapter, we use accounting standard 26. Is all about intangible asset, and goodwill is also an intangible asset. As per that, we are learning accounting standard which is related to the goodwill or treatment of goodwill. First of all, we need to know about what is intangible asset. Intangible asset is you can't feel or you can't touch or you can't value it exactly. So that are all intangible asset. And while treating intangible asset, everybody has their own value, because you can't value it exactly. There's no exact value for the intangible assets. That's why, in order to control it, in order to regulate it, ICAI brings accounting standard 26. So that's what we are learning in this video, accounting standard 26. Actually, I don't get into deep to the accounting standard 26. I'll only explain you what is related to for us or in this chapter. As per the accounting standard tells, internally generated or valued of goodwill will not be considered as an asset, and we can't show it as fixed asset in the balance sheet as well. It's internally generated and evaluated, so that cannot be written in the balance sheet. Suppose if goodwill is in the books of account before admission of a partner, then we'll be writing goodwill in the new balance sheet. So for us, in order to treat accounting standard 26, we need to apply in the two situations based on this accounting standard. That is, when a new partner brings cash of goodwill to the business, or when new partner is not bringing anything as a goodwill. So in the first situation, we need to pass a general entries. So the general entries work like this: when a cash is bought by a new partner, you have to write cash account debtor to new partner's capital account. This entry will be written when a cash is bought from the new partner. When cash is bought from a new partner, you have to distribute to the old partner, right? For that as well, we have another general entries, that is distribution of cash bought in by the new partner. So in order to distribute that, we have a general entries, that is new partner capital account to the old partner's capital account as per sacrifice ratio. And we have another general entry. This will be applied only when the old partner withdraw the goodwill. So that entry will be like this: old partners capital account data to cash account. So these are all the general entries will be under the first situation. And the second situation is whenever the new partner does not bring any goodwill to the business. So in this situation, as per the accounting standard 26, we have only one general entry, that is new partner capital account data to old partner's capital account, that should be transferred as per sacrifice ratio. So this is all about the treatment of goodwill, how you need to treat and what are the general entries you need to pass. So that's it for today. If you like this video, hit like and share with your friends. Like always, see you in the next series. Bye.